Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of American Airlines Group Inc., ticker symbol AAL. So American Airlines, similar to its peers, has been heavily impacted from the COVID-19 pandemic lockdowns. Globally, we're seeing a reduction in travel that is still not back to where it was pre-pandemic. U.S. domestic travel is at least rebounding. However, the airline industry as a whole is facing a lot of challenges right now, including canceled and delayed flights, union contracts, and just general uncertainty, especially going into a potential economic downturn. We're going to be looking at American Airlines fundamentals here to try to understand whether or not these have rebounded from their pandemic woes. So currently, American Airlines is trading for $12.04 per share. Over the past year, their stock price is down 43%. Over 3 years, their stock price is down nearly 55%. Over 5 years, that's even worse. Their stock price is down 74%. And since they were listed nearly 9 years ago, the company's stock price has been cut in half, down 52%. So not looking so hot over the last decade or so for American Airlines. Historically, the airline industry has been a very tough business. American Airlines is trading just 19 cents over their 52-week low, which is down about $10 from their 52-week high. Currently, about 12% of the company's shares outstanding are sold short, and they have nearly an $8 billion market cap. For more background about the company, American Airlines is the world's largest airline by scheduled revenue passenger miles. The firm's major hubs are Charlotte, Chicago, Dallas-Fort Worth, Los Angeles, Miami, New York, Philadelphia, Phoenix, and Washington, D.C. After completing a major fleet renewal, the company has the youngest fleet of U.S. legacy carriers. As of the end of last year, American Airlines operated a mainline fleet of 865 aircraft. The company was formerly known as AMR Corporation and changed its name to American Airlines Group Inc. in December 2013. American Airlines Group was founded in 1930 and is headquartered in Fort Worth, Texas. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of American Airlines based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public. It's going to continue to improve and get better over time. So with that said, let's get right into our analysis today. Starting off, we want their average return on capital over the last 5 years to be above 14%. So there are 2 reasons for this. The first is that over the long run, over the course of multiple decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second is that the average publicly listed business earns about a 7% return on capital. So by looking for businesses whose average returns on capital are 14% or higher, we can potentially build in some margin of safety for ourselves based off the overall quality of the business, with their returns being at least twice as good as average. In the case of American Airlines, they were earning above average returns on capital prior to the COVID-19 pandemic. However, the pandemic really hit airlines hard. People stopped traveling amid COVID lockdowns. And since 2020, American Airlines has posted negative returns on capital in these 2.5 years so far. They ended fiscal 2021 with negative 13% returns on capital, and over the last 12 months, they're still producing negative 4% returns on capital. Because these last 3 years have been so difficult for the business, averaged out, American Airlines is actually earning negative 1% returns on capital. So while the business is improving from the huge downturn that it saw during the pandemic, their returns on capital are not back in the clear here, and it is nowhere near where it was prior to the COVID-19 pandemic. This is going to be an X here. Historically, the airline industry has been a very tough business. They face a lot of operational challenges with unionized workforces, a lot of CapEx, and then they're dealing with a commodity product with their customers wanting to choose the lowest cost options in most cases. Overall, the airline industry is a tough industry to be in, and American Airlines is still in a very tough position here. So this is going to be an X to start off on metric number 1. Metric number 2, here we're taking a high-level overview of the cash coming into the business. We want their revenues, earnings, and free cash flows to have grown over the past 5 years. This metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. So American Airlines has seen their revenues decline. From 2017 until 2021, they dropped by nearly 25%. However, from the end of 2021 over the last 12 months, their revenues have gone back up to $40 billion annually. This is still down from where they were in 2017. So those revenues are still down overall. Then their earnings went from being positive, now they're negative. They're still negative over the last 12 months. And while American Airlines had negative free cash flows in 4 out of these 5 fiscal years, they actually had positive free cash flows at the end of last fiscal year. However, over the last 12 months, they've consumed about $2 billion of cash in their business. So this is actually going to be down as well. So all 3 of these numbers are down here. This is going to be another X here on metric number 2. Again, this business was really impacted by lockdowns and the lack of travel. Even with government aid here, their fundamentals are still looking to be in rough shape so far. Next up for metric number 3, we're building off of the previous metric. Here we're taking a look at the business from the perspective of an individual shareholder in the company by looking at their earnings on a per share basis. So we want their earnings per share to have grown over the last 5 years. As we learned in the previous metric, over this time their earnings have gone from being positive in 2017, 2018, and 2019, and now they have been negative so far through 2020, 2021, and 2022. In addition to this, their earnings per share have actually gone down faster than their earnings have, which means that they've also been diluting existing shareholders over this time. Primarily during 2020 and 2021, the company has diluted existing shareholders by about 32%. They had to issue new shares to raise capital here. This is important because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a company issues new shares and dilutes existing shareholders, they're decreasing your ownership percentage of the business, which is ultimately going to decrease the percentage of the business's profits that you're going to be entitled to. So as long-term shareholders, we don't want to see shareholder dilution, especially when it's to raise capital because of liquidity issues. So yet again, this is going to be another X here on metric number 3. Metric number 4 is going to be very similar. We're also looking at the business on a per share basis. Here we want to see 5-year free cash flow per share growth. So from fiscal 2017 to fiscal 2021, they actually grew free cash flows. Fiscal 2021 was the only year over this time that they had positive free cash flows. However, over the last 12 months, their free cash flow per share numbers are down from where they were in 2017. This is again because of their increased cash consumption and the fact that they've been diluting shareholders over this time. So this is going to be another X here on metric number 4. So far to start off, we're not doing so hot on American Airlines. We are 0 for 4. Next up for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that the business has produced over the last 5 years. This will help us evaluate how the business utilizes leverage. We don't want to be investing in overly levered businesses because in economic downturns, overly levered businesses are at the greatest risks of potential business failure. While it's extremely unlikely industry-wide that airplanes would be going away, being in a precarious financial position would potentially make American Airlines a target for a takeover, or they may even be forced into declaring bankruptcy if no purchaser were to come along. At the end of last year, they had about $34 billion in net debt. Currently, they have about $32 billion in net debt, so they have paid down a little bit of that. What's concerning here is that over the past 5 years, they've consumed about $10 billion of free cash flow in their business, with $8.6 billion of that coming in 2020 alone. So the company has had to consume a ton of cash. This, coupled with the fact that they're earning very negative returns on capital and have had to issue so many shares here, really showed that the business was just hanging on, trying to survive over this time. Also, something that did not bode well for the company was that they came into the pandemic with a lot of debt on their plate, which that looks like they would have been overly levered even coming into the pandemic. It just shows you that overly levered businesses have the highest potential for poor shareholder outcomes. So this is another X here on metric number 5, and we are still 0 for 5 through 5 metrics. Finally, the big metric of them all, metric number 6, we want their average free cash flow to total enterprise value to give us a yield above 5%. If this is the case, this will give us a slight risk premium to the risk-free rate and potentially give us a reason to be interested in the business. American Airlines just hit its 52-week low for their total enterprise value. Total enterprise value is their market cap plus their net debt position. The reason we're using it here instead of their market cap is that this is going to be more reflective of economic reality and will be more akin to valuing American Airlines as a private business. So currently they have a $40 billion total enterprise value, And as we learned over the past 5 years, the company has not been producing free cash flows. They've actually been consuming cash in their business. So they've consumed $10 billion of free cash flow over this time. And because of the lack of free cash flows coming out of this business, this is just going to be too difficult to give a reasonable fair value estimate here. The airline industry as a whole is having a pretty rough time generating free cash flows since the pandemic. So based on the fundamentals of the company, it's very difficult right now to try to determine what would potentially be a fair price for them. And this is going to be another X here on metric number 6. Then here we're taking a look at American Airlines dividend profile. Currently, American Airlines does not pay out dividends. However, coming into the pandemic, they did. These dividends were well supported by their earnings prior to the pandemic. However, once the pandemic struck and their business was pretty much put on total lockdown, pretty much frozen in place, the business cut their dividends, which was a prudent capital allocation decision that came by way of necessity, as the business pretty much needed all the money that it could to stay solvent and not go under given the black swan event of the COVID-19 pandemic. So if you're potentially interested in this business for its capacities to pay out dividends in the future, you'd really want to be on the lookout here to see that their underlying fundamentals are improving. So in summary, American Airlines is going to go 0 for 6 today. They did not check the box on any of our 6 metrics. The business is earning negative average returns on capital, given the extreme duress the business has been under since the pandemic lockdowns. Over this time, their revenues, earnings, and free cash flows are all down. They've diluted shareholders by nearly a third. They've had to raise additional debt in their business, and they're still consuming a bunch of free cash flow. And in 2020, they completely cut their dividend altogether. So as mentioned, airlines historically are a very difficult business. Warren Buffett has repeatedly had different airline investments over the years, and in almost every case, they've either caused him unneeded stress or turned out to be lost opportunities. He joked about it in one of Berkshire's annual meetings by calling himself an airaholic. And historically, the dynamics of the airline industry have just made being an effective airline operator over multi-decade periods of time a very tall task. There have been some companies that have been able to do this by being a low-cost provider, given the fact that commercial air travel is a commodity business. So companies that come to mind that are good examples of this are Southwest. They were profitable every year of their existence leading into 2020. However, they were not profitable for the first time in 2020. Also, AirAsia has a very similar style low-cost producer advantage there. American Airlines has been an incumbent airline, and they are not at the same quality level that Southwest is at. But given that, there would still be a price that this business would look attractive at. However, given their deteriorated fundamentals, it doesn't look like we're able to get a reasonable estimate of that yet. So this type of analysis really serves as a beginning and holistic understanding of American Airlines to help determine if it's worth your while to dig in and learn more about the business. This analysis is not financial advice, and it is not a buy or a sell recommendation of any security. Before considering any potential investment decision, please consult with the properly licensed and registered financial and legal professionals. If you're interested in learning more about American Airlines, I would highly recommend diving into the company's historical 10Ks, where you can learn on a year-by-year basis the history of the company. You'll also get a breakdown of the risks the company is facing, as well as both the challenges and opportunities of the current environment that they're operating in, and you'll get an understanding of how management is approaching capital allocation and strategic decision-making going forward. When you're done with that, I would also recommend reading through some of the company's recent earnings call transcripts to understand on a quarter-by-quarter basis what this company's fundamentals are doing and whether they're continuing to see improvement from their pandemic lows. As a value investor, you ultimately want to come to understand a business as if you owned 100% of it, and you can truly know all of its ins and outs and understand what's important and what's not about that business, ultimately coming to understand the essence of the business. So with that said, that's it for today's fundamental stock analysis of American Airlines Group Inc., ticker symbol AAL. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about American Airlines with me, and have a great day.